Hi, my name's Ian Pearson and I'm the author of The Advisor's Guide to Settlement Agreements. And this is my quick and easy tax takeaway on post-employment notice pay. I met with a client last week who had been given a very generous settlement package. However, the wording of the notice pay and the payment in lieu of notice clauses were poor, leaving my client with a much bigger tax liability than needed. So let's look at what happens in practice. Here's some pretty standard wording. Termination date is at the end of the month. Until then, the employee will perform their normal duties. The salary will be paid as normal and tax and national insurance deducted. Then we've got 3 months payment in lieu of notice, and that will be taxable as post-employment notice pay. So let's work through this using the following example. The executive is on £52,000 a year. They were told about the redundancy on the first of the month. They will leave their job at the end of that month. They're on 3 months' notice and they're getting an enhanced package, hence the settlement agreement. So let's look at how this would work in practice. The executive is given notice of redundancy on the 1st of July and his last day of work will be the 31st. That will make the whole of July taxable in the normal way. He's then on 3 months' notice, a payment in lieu of notice, and that would technically end on the 31st of October, meaning that the whole of August, September and October will be post-employment notice pay. But let's see if we can do this a little bit more tax efficiently. Again, we'll take the 1st of July as notice of redundancy and the last day of work being the 31st, and again, the whole of July being taxable in the normal way. However, if we take that first as the first day of notice, then technically the 3-month notice period will end on the 30th of September, meaning that only August and September are now post-employment notice pay, and that October will be a tax-free month, which can then be moved over to the ex gratia element. So how would this actually work in practice and how much would it give the employee? It's a very good site, gov.uk site, Estimate Income Tax, and this allows an estimation of take-home pay and the tax take. So here's the site. We start now. Our executive is earning £52,000 a year. They're under the state pension age. We don't know what their tax code is. They're not in Scotland. And so we get this result here. This here is the amount of tax that is payable by the executive over the year. So let's put this into the calculator. The tax take is £13,198.20. We divide that by 12 to give us the monthly tax take. And so that is £1,099.85. So on £52,000 a year with a 1 month notice of termination, the tax saving would be £1,100. So that's a very, very nice weekend away, holiday cottage with the kids, or someone's mortgage payment. But let's see how that would work on an average salary. Average salary is just over £30,000. Let's say they're given 10 days notice, which is the amount that ACAS say you should get to negotiate a deal. Even there, the saving is £234. So that's my quick and easy guide to post-employment notice pay. This nugget and many more can be found in my Advisor's Guide to Settlement Agreements, available in paperback and in Kindle edition. Just go to my site, www.settlementagreementguide.co.uk. Thank you for watching and look out for my next video blog on settlement agreements.